Hello, everyone. Today's training session topic is foreign currency revaluation. The objective of this training session are by the end of the session, you will understand the concept and purpose of foreign currency revaluation. To ensure accurate valuation of open foreign currency balances at the end of the period. To identify the accounts eligible for foreign currency revaluation. To learn how exchange rate fluctuations impact financial statements. To understand the calculation of unrealized exchange gains and losses, to learn the end-to-end revaluation process in the Onfinity system, to understand the automatic posting of revaluation journal entries. Before proceeding, we have a prerequisite. You must have completed Onfinity 100 and SEM 200, Financial 200 trainings, so that you can easily understand the revaluation form. The following configurations should be completed. Currency types should be defined. Global currency conversion rates should be maintained. Default accounting settings should be defined for business partners, including revaluation accounts. Foreign currency revaluation form. Foreign currency revaluation is the process of updating the value of open foreign currency transactions by converting them into the company's base currency using the latest exchange rates as of a specific date. Since exchange rates fluctuate over time, the original recorded values of foreign currency balances, such as accounts receivable, accounts payable, bank balances, and general ledger entries, may no longer reflect their true values. Revaluation ensures that these balances are accurately represented in the financial statements. This process is usually performed during period-end activities, such as month-end, quarter-end, or year-end closing. The foreign currency revaluation form identifies all open foreign currency transactions, applies the current exchange rate, and calculates the difference between the original value and the revalued amount. Any difference arising from this calculation is recognized as an unrealized exchange gain or loss. Overall, foreign currency revaluation helps organizations maintain accurate financial records, comply with accounting standards, and present a true and fair view of the financial position affected by currency fluctuations. This is my Onfinity link, and these are my login details. I am now clicking on the login button. This is the home screen. From here, I am opening the foreign currency revaluation form. The form appears like this, and here we have the accounting schema field. You can select the accounting schema for which you want to perform the revaluation. Next is the organization field, which determines which organization's records will appear. If you select Sonic Solutions, only Sonic Solutions records will be displayed. If you select Sonic Ventures, then Sonic Ventures records will appear. Here, I am selecting Sonic Ventures. Next is the revaluation date, which means the date on which you are performing the revaluation, followed by the auto currency type. We need to select the date on which we are performing the revaluation. Next is the currency type. Here, the data will be shown in INR. All transactions in currencies other than INR, such as AP invoices, unpaid invoices, unallocated payments, unallocated cash, general ledger journals, and bank statement lines, will be displayed here. Based on the selected currency type, the system determines which exchange rate to use for conversion. For this, we need to select the appropriate currency type. If we want to include GL journal lines as well, we need to mark this checkbox as true. As of now, I am keeping it false. I am now clicking on Calculate. The system displays all transactions created for Sonic Ventures in currencies other than INR. Accordingly, the records are shown here. These include unpaid invoices, unallocated payments, unallocated cash, journal entries, and bank statement lines. Here, we can see different columns that define document details. Business partner, the name of the business partner, document type, the type of transaction, document number, ledger code. The ledger code is picked from the business partner that is linked to the respective account. For example, this is an AP payment record. I am opening this record in the AP payment screen. This record is currently unallocated, as the unallocated amount is showing as 0. We can also see that this account is created against the vendor master. The ledger code displayed in the revaluation form is derived from the default account setup. Here, we have accounts payable, trade as the default account. You may wonder why only this ledger code is appearing when there are multiple records. This ledger code appears because foreign currency revaluation is enabled on this default account. If the foreign currency revaluation option is not enabled for a particular record, the ledger code will appear as 00, which means no ledger code is mapped for that vendor. Currently, the ledger code is displayed because it is properly mapped in the default account setup. If multiple accounts exist, foreign currency revaluation can be enabled for only one account. It is not valid to enable foreign currency revaluation for more than one account. Next, we have the document date, which indicates the date on which the transaction was created. Here, we can see this payment document has a transaction date and accounting date of 2209, and the same date is displayed here. Next is the foreign currency, which shows the currency in which the transaction was created. In this case, the transaction was created in EUR, so EUR is displayed. Next is the foreign currency amount, which indicates the transaction amount in the original currency. This transaction was created for 20.18 EUR, and the same amount is shown here. Next is the amount in reporting currency. The reporting currency is the currency defined in the selected accounting schema, which is INR. When 20.18 EUR was converted on the document date, the amount came to Rs2 99.93. You can verify this using the currency conversion setup. Here, the conversion is from EUR to INR. Since this transaction belongs to the September period, the exchange rate applicable for September was used. Based on this rate, the converted amount matches what is displayed on the form. Now, when the same amount is converted on the revaluation date, which is 31/12, end of December, the exchange rate is 103. Because the exchange rates are different, a difference amount is calculated. In this case, the difference comes to 21.39, which represents the unrealized gain or loss. This same logic applies to all records displayed in the form. For this process to work correctly, the foreign currency revaluation option must be enabled on the relevant account. Another important configuration is the accounting schema, which represents the accounting book. Here, the selected accounting schema uses INR as the base currency. In this accounting book, under the journal ledger, the following accounts must be configured: realized gain account, realized loss account, unrealized gain account, unrealized loss account. All 4 accounts must be mapped so that the system can post the gain and loss entries correctly. This configuration is mandatory. These are all the EUR currency records that are currently unpaid or unallocated. Once the differences are calculated, we proceed to create the GL journal. I am selecting the GL option and choosing the required document status for the GL journal. Next, we have 2 additional options. Download Excel. This downloads an Excel file containing all records shown in the form. In this case, there are 7 records, and all details are included. Print. This allows you to print the foreign currency revaluation report. Now, I am clicking on the Process button. The system creates a GL journal with 7 journal lines. The generated document number is 1054. I am now opening the GL journal screen. Here, document number 1054 is the newly created journal, with the revaluation date set to the end of the year. The journal lines show debit and credit entries based on the business partners and accounts. For example, we can see an unrealized loss of 21.39 for one of the records. When we compare this with the revaluation form, the same difference amount is displayed. This difference is treated as an unrealized loss, which is why it appears under the unrealized loss account in the journal. All gains and losses are consolidated and posted based on the available foreign currency revaluation records. Thank you. That's all for this session.